So I want to say something about silver and gold. It's the 21st of November 2013 right now, and both silver and gold has taken a serious beating, much lower than their highs. And of course, anyone who's in Austrian economics and who's looking at the madness of all the money printing would have expected the gold price and the silver price to rise much more. Of course, the rise that we did see was in large part due to the fact that we saw that the new money printing was coming around. And I think we need to look at the fall in the price of gold and silver as a temporary thing where the money that are chasing returns have seen and saw for a limited time that the returns they could get on riding the credit wave, riding the wave of new money, was higher than the long-term gain that they will get from being right about the gold and silver price in the long run. So people have been selling gold and silver. I've sold some myself to chase returns in the stock market, in the real estate market, in the bond market, where the money creation is so extreme that people have been able to make really good returns for a few years, riding the wave of new money. And it's a temporary thing. They see, and they've been correct. I mean, it was correct of me also to sell. I sold a lot of gold at 1380. And now it's much lower. So in a way, it was correct. It depends, though, if I get in again. But I've managed to get some return on that money other places. So in a way, that was correct. And that is greed driven. It's driven by short-term greed and riding the credit wave. That will eventually turn around, and fear will come back. So fear will again be the dominant force driving the market. And you need to time this correctly to get into gold and silver again. It's not a bad idea to just stay in gold and silver. So if you just stayed so far, I say good for you. I mean, so much the better. You sleep better at night and you think more long term, and so much the better. I've been too stressed myself, sort of chasing returns and looking at things that I haven't been able to just sit quiet. Maybe I should have, maybe I should have. But what we know is that we're riding a wave now of easy credit, of new money. And this wave will eventually end. And we'll reach a point where the euphoria, there's still more euphoria to take out of this market. I think now we're at a point where, a lot of good things have been discounted and all that, but we're not necessarily at this kind of irrational exuberance that we've seen before, and that we might see again, that there'll be a new round of irrational exuberance, and it can be taken quite far. So the markets could rise by 20, 30, 40% more, but there will be some kind of point where the market dynamic and the mentality of the market will change into fear again. Could be some kind of external event like 9/11 or a natural disaster or something like that, but it could also just happen just one fine day the market decides to turn around. And because there's so much money out there now, the next rise in gold and silver will be spectacular, because the fear, people will throw themselves in. People like me that have sold gold on 1380. I see that, oh, damn, some event happens or something, and I throw myself in and I buy gold again. So there's going to be huge demand. So the right thing to do is to start buying gold now, buying silver now. It's, the right time to buy gold is almost always now, if you have the psychology and the mentality to do it. And as Doug Casey would say, right now we're in the eye of the hurricane. Right now it's sort of calm waters, and the stock market has risen, and it kind of looks halfway good. It's because we're in the eye of the hurricane. The hurricane went over us and started in 2008, 2009. And right now it's calm and will hit the new wall, the wall on the other side. And it's going to be much worse than it was before. So it's not wrong to buy gold now. It might fall some more, but still, I have a feeling that we're sort of bottom out now on both gold and silver, sort of territory. And part of that explanation is that the stock market and the equity markets and the bond markets can't really rise that much more. Most of the positive news have been discounted into the prices. You could have another run of irrational exuberance, but that's something else. Especially the people watching gold and silver, they're mostly rational people. So I don't think they will participate in the irrational exuberance phase of the market rise to the extent that they've participated in the rise that we had so far. So I believe the market is going into a different phase. And of course, the most leverage you have is in the mining companies, and especially the small mining companies. I've been in that industry back and forth for 20 years, and it's an extremely volatile industry, and the prices, the valuations of those companies are extremely volatile. And right now, they're very cheap. So if you haven't bought in already, this is probably the time to do it. I mean, the time to buy stuff is when it's low. And that's now. The time to sell stuff is when it's high, and that's where the stock market, and especially the bond market. I mean, the bond market is the biggest bubble in the history of mankind, especially the American bond market. And when that turns, it's going to be spectacular, and gold could rise. I mean, we already have a psychology where people sort of have seen that gold can rise to $1,800, $1,900. So the run up to that, to the levels where we were, can go very, very fast, days or weeks. And you want to position yourself before that happens. So silver now at $20, sure, it could still fall, but I find it attractive. I'm looking at it. So any day I'll do something, and I think you should too.